Amazon did issue disappointing revenue and profit forecasts for the holiday period, but some analysts are saying that investors are missing the point about the growth story here. Are they overreacting?
Right. So what's interesting here is I think a lot of investors would say, as we are seeing growth roll over, many investors are probably overreacting. It's not just Amazon. Yes, the numbers are absolutely astounding, down about 25% since the September high. It's lost about a quarter of its market value. So yes, that's very, very notable. But it's not just Amazon that's been leading the leg lower. We've seen all the other FANG names lower as well, and really tech broadly. We've seen value start to outperform and growth really start to take a step back. So a lot of investors are saying that people need to come to their senses. People need to realize that, yes, the likes of Amazon did miss on revenue, maybe give a disappointing profit forecast for the holiday season, but things aren't really much worse than they were, and the fundamentals mostly are still in place. So if you really believe in these companies going forwards, what so much has changed on that level?
And let's take a look at Facebook right now. Shares have really been all over the place in the past hour, down 6%, up 2%, then down 7%, and now flat. What's going on here?
Investors are trying to figure out what's going on here. I mean, immediately after the earnings release, it seemed like Facebook was going to take a bit of a leg higher. Then all of a sudden, it is dragged lower. And it seems like investors just are very fickle and jittery, and they don't know what they want. Even if you look at the market as a whole and its performance today, you take a look at the S&P 500. Yes, it finished up more than 1.5%, but it had 5 intraday swings of at least 1%. So that just shows you that investors, they don't have a consensus of where the market should be going, where these stocks should be going right now. They're trying to figure it out. But at the same time, you're facing this headwind of this selling pressure that we've seen over the last month. And you don't know if you want to catch this falling knife and actually get in. And we're seeing that at the broad index level, but also, as you can see with Facebook, at a single stock level as well.
Right. Even companies that have reported stellar earnings aren't changing sentiment, and the S&P is still moving towards its worst monthly performance since the bull market began. I mean, what is it going to take to be a true catalyst here?
We've been looking for catalysts, and I've been asking this question every single day to every investor I speak with. What is the next catalyst? What is the leg higher? Because the fact of the matter is, if you look at the economic data, yes, it's great, but a lot of people say, well, is this the best that it gets? It's the same thing with earnings. A lot of people are saying if we do get something on the trade front, maybe that will help us higher, but many aren't expecting that to happen until at least after the midterm elections. And at the same time, with President Trump coming out yesterday saying that they are ready to tax the rest of those imports from China on those goods, it looks like it will probably get worse before it gets better. So in the meantime, we're sitting here with markets languishing. Not today, they were higher, but still investors are trying to figure out what the next catalyst is higher, and if they want to be positioned for a market in this market that has just been so downtrodden in October, if there really isn't that material catalyst that is so clear and at the forefront.